The International Monetary Fund, World Bank spring meetings have come and gone, and finance chiefs headed home with still neither relief nor more clarity from tariffs or on the uncertainty. It was also evident that IMF officials are more optimistic on the outlook than most delegates as traders, analysts await news of breakthrough in terms of trade deals that could reduce the global cost of trade. Hello and welcome to Global Business Insights, where we look closer at some of the headlines moving markets and try to join the dots to equip viewers to succeed in the marketplace. Last week, stocks rebounded as Trump eased concerns about an escalating trade war with China and also with regards to risks to the independence of the Federal Reserve. This week, for the US, we get an update on inflation and first quarter economic growth, and on Friday, April jobs report. Also reporting earnings will include Apple, Amazon, Coca-Cola, Meta, and Microsoft. As the IMF spring meetings close, World Bank chief economist Indermit Gill warned of higher debt levels for emerging markets, also noting that tariffs has led to slowdown in trade and foreign direct investment, which are crucial to developing country growth. He and other World Bank and IMF officials told countries to cut their own tariffs to boost growth prospects. The Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, has advised the United States to reevaluate its position on reciprocal tariffs, particularly as they impact the fragile economies of poorer African nations. The WTO boss also urged African countries to deepen self reliance by boosting intra African trade and do more to attract domestic investment, stressing that the global aid landscape was shrinking fast. UK Chancellor Rachel Reeves last Friday held her first formal talks with US Treasury Secretary Scott Bessent, with both finance ministers agreeing on a landing zone for a bilateral trade deal. Reeves has opened the door to Britain cutting its tariffs on imports of US made cars, along with agricultural and seafood products, as she tries to persuade the Trump administration to cut its levies on UK exports. Still in the UK, polling firm Ipsos MRI said on Sunday that 75% of Britons expect the economy to get worse over the next 12 months, up 8 percentage points since March. This was as confidence among people in Britain about the economy over the next 12 months drops to the lowest on record, with only a small number expecting improvement over the period. The French government is thinking of combining or eliminating a third of government agencies by the end of the year to save costs. Amélie de Montchalin, the Public Accounts Minister, said on Sunday that many state-backed agencies can be merged or completely eliminated, adding that 2 to 3 billion euros can be saved. Finance Minister Eric Lombard has also said the government will seek to cut 40 billion euros in spending in the next fiscal year. Nissan Motors, according to reports, may be planning to stop vehicle production at its Wuhan plant in China by March 31, 2026. The decision comes after the operation rate at the 300,000 vehicle capacity plant, which produces the Ariya electric vehicle and X-Trail SUV, sank amid stiff competition from Chinese automakers. China's industrial profits returned to growth in the first quarter as cumulative profits of industrial firms rose 0.8% to 1.5 trillion yuan. That's about $205.86 billion. That was in the first quarter from a year earlier. This was after we saw March profits up 2.6% year on year, reversing a 0.3% decline in the first 2 months of 2025. It also reversed a trend of continuous declines in cumulative profits of enterprises since the third quarter of last year. And also in China, Huawei Technologies is preparing to test its newest and most powerful artificial intelligence processor, a chip called the Ascend 910D. Huawei hopes this could replace higher-end products from US chip giant Nvidia and has already approached some Chinese tech companies on testing performance of the new chip. Nigeria's Competition and Consumer Protection Tribunal said on Friday that a $220 million fine against Meta Platforms by the competition watchdog for violating local consumer data protection and privacy laws has been upheld following an unsuccessful appeal. Nigeria's Federal Competition and Consumer Protection Commission FCCPC fined Meta last July for discriminatory and exploitative practices against Nigerian consumers compared with what it does in other jurisdictions. Angola Finance Minister Veradave do Sousa said on Friday that the country is already running stress tests on potential fallout from a decline in oil prices on its finances. She also added that a request for an IMF loan program was likely. Sub-Saharan Africa's second biggest crude oil exporter has based its 2025 budget on an oil price of $70 per barrel. But Brent oil futures has already briefly traded below $60, the lowest level in 4 years. There's also concern on vulnerability of Nigeria. That's the largest crude oil exporter. 2025 budget, which was based on an oil price benchmark of $75 per barrel and a production target of 2.06 million barrels per day. Both price and production underperforming that target or that benchmark. Those strongly buffered with healthy reserves, as we are told by the central bank governor, fiscal space will still feel the adverse hit of lower oil prices. Still in Nigeria, at an event on the sidelines of the IMF World Bank spring meetings in Washington, Nigeria Central Bank Governor Cardoso offered a word of reassurance, saying the reforms going on in Nigeria are not easy, but they are delivering results, and Nigeria has moved from a position of vulnerability toward one of growing strength, adding that the economic trajectory is beginning to turn positive. The meetings were an opportunity to showcase reforms and wins as Nigeria gets back on the radar of serious investors. But how do you go from decent early wins to more far-reaching sustainable change that significantly moves the needle? Change specialists acknowledge that early wins and low-hanging fruits, things that can be done mainly with courage and bringing in the right change leaders and agents, are definitely important. But far-reaching, irreversible, transformational change will always be long-term and may not earn the applause of votes in the medium or in the shorter term, nor will it get positive news headlines, and can be more easily derailed by change resistance. I will touch on three important things. First is vision and communication and aligning stakeholders with a bipartisan long-term goal of where Nigeria needs to be. It's important that today's initiatives and daily disciplines point towards that shared vision. It's also important that long-term implications of the vision are openly discussed and bought into. Vision is not a book, report, or deck of slides. It's a dream of a better future that is widely known, widely understood, widely desired, and widely believed. Second, institutional transformation is difficult, but key to sustained change. In simple words, how we do things, how we interact with government, how we pay duties and taxes, how we register companies, how we get information on government actions. A vast scope for digitization and efficiency gains still exists. Related to that is decent data, statistics, and metrics that track change progress need to be expanded significantly to build credibility on the case for change and also be able to show progress beyond the available traditional but still scanty lagging indexes. Third, to leapfrog from, say, a 3% GDP growth, which is projected to 7 to 9% growth, which is needed to eradicate poverty, there are some familiar catalysts. First is electricity, infrastructure, breakthrough, affordable and available energy ports and motorable roads to open up economic corridors, and also having improved digital infrastructure backbone. All these are very key. Then investment and low interest financial support for small and medium business and labor intensive manufacturing, export sectors boosted, plus special support for digital startups and new technology businesses. Again, very important. The route to additional critical future-ready businesses like electric car battery production, pharmaceuticals, chip production, and AI-enabled industry, and so on, will need a trajectory mapped out. To free up government fiscal space, very important to support business and social welfare. Government spending needs a major haircut, just like we reported today that France is doing. Tilewa Adebajo, CEO CFG Advisory, in his latest note on the Nigerian economy, says sale of oil and gas joint venture assets to optimize equity within the federal government of Nigeria capital structure and balance sheet are crucial for Nigeria's path towards sustainable development. The debt profile, while manageable, is not sustainable in the long term despite a recent Fitch upgrade. According to him, deliberate investment projects such as the Agro Airport development and Olokola Deep Sea Port in Ogun State and other major infrastructure projects need to be replicated nationwide. He also underscored the importance of government policies that support trade, domestic investments, and industrial development policies to foster a conducive environment for business growth and economic expansion. Let me end by saying a few things about developments at Nigerian National Petroleum Company Limited, NNPCL. We recently were told of an ongoing forensic audit. A strong leadership team was brought in and they have quickly pledged a transformational agenda. A press release on readiness for IPO was withdrawn just before the new team came in with little explanation why that happened. Most analysts observe that much can be done with a great team and getting in investments in a materially de-risked environment with a tested A team of leaders, as NNPCL is positioned on a local and or international stock exchange for that urgently needed window for capital funds inflow and market credibility, especially at a time when oil prices are likely to struggle. It's perhaps apt to hold further comments until we get more clarity on the forensic findings and the IPO trajectory. And all these still need to be clarified. Still much fog on NNPCL, in my view, where there should be clarity. Asia Pacific markets were mixed as investors assessed China's promises to support domestic businesses potentially hit by higher tariffs and other developments in trade negotiations between the US and countries in the region. Over the weekend, China's Finance Minister Lan Fuan said it will adopt more proactive macroeconomic policies to promote the realization of the expected growth target for the whole year and continue to bring stability and momentum to the global economy. China plans to hold a press conference later today about policies and measures on stabilizing employment and ensuring stable growth. All this as Chinese manufacturers are reported to be pausing production and turning to new markets as the impact of US tariffs sets in, with lost orders also hitting jobs. Well, that's all on this special edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye bye.